3, 2, 1. Boom. It only took us 8 years to do this, Larry.
Nice.
Thank you for doing this. I really appreciate it. Ultimately, what we're trying to get out of this for the people watching, what would you say to them? What are you trying to get to them?
Maybe that the industry of accounting and taxes is not so bad, but it's very complicated.
That's great. That's great. So before we get into all the details of accounting and taxes, the fun stuff, tell us about your background, your origins.
Sure. I was actually born in Arizona, although most people think I'm a Texan. Yeah, my dad was in school in Arizona, and we moved back to Arlington when I was like 6 or 8 months old. But so we've been in Texas my whole life, but I was technically born in Arizona.
I did not know that.
Yeah, in a town called Miami, Arizona, which no longer exists. It's been gobbled up by a town called Globe.
Interesting.
Yep. So anyway, been in Texas my whole life. My dad worked at Gulf Oil when we were kids, so we were in between Dallas and Houston, and then Orlando, and then back to Houston for my high school years. So junior high in Orlando, high school in Houston. I went to Northbrook High School on the north side of Houston.
North side?
Uh-huh.
Finally went to Houston for the first time.
Oh, nice.
This past year.
Oh, okay.
Okay.
Yeah, the downtown's, it's really a lot different than it was when I grew up there. I left, so I went to school in 83. So I graduated high school in 83, the same time my parents moved away and I moved to A&M. I went to A&M and lived there for a couple of years and tried to go to school.
Tried.
Yeah.
So you went to A&M for, what did you study when you went to A&M?
Yeah, I studied engineering initially because that's where supposedly the money was. But in 1983, they also put a lot of petroleum engineers out of work. So what happened was I wasn't quite sure that's what I wanted to do. Didn't always go to class. Probably played dominoes a little more than I should have, drank beer, things like that. Things that college kids shouldn't do. That's what I think I expressed to my 4 daughters. These are things you should never do. Here's pictures, don't be like this. So I've been going to school on and off, and ended up going to Blinn Junior College, which has got a campus there at College Station.
Is that the school that has is that a junior college?
Yeah, in Brenham.
And they have a great football team?
Great football team.
Newton.
Yeah.
Awesome.
That's who it is. So Brenham is where the Bluebell is made, Bluebell ice cream, and that's where Blinn is.
That's right. It's on the cartons.
Yeah, and it's south of College Station, but College Station has a campus.
Yeah.
So I went to the Blinn. I took basic classes, kind of got back in. In between, I took a year off, or about a semester off. I moved up to Seattle, and after about 40 days of not seeing the sun, and I missed getting into U of W for enrolling and getting accepted.
Is that why you went over there?
Well, my parents moved to Seattle. And I was, no, I wish, yeah, no, that happened later. So I moved up there, and the sun didn't come out one time.
40 days.
Something like that. And so I called my roommates, and I said, hey, did you rent out my room? And they said, of course. I said, did you rent out the couch? And they said, not yet. And I said, well, don't get rid of it because I'm headed that way. I'll be there in 3 days. So I literally drove from Seattle to Sacramento, spent the night. Then I drove to Wilcox, Arizona, and then I drove to College Station. 3 days. I just left, and I got a job at Kroger and spent the next 5 years at Kroger, going back to school. And so I changed my major, obviously, in all of this. So I went to see the counselor and got the grades, kind of got the grades getting, and she said, okay, wonderful. You have you have a 4.0 or 3.9 something in this group of classes.
Okay.
And you have a 1.2 in these group.
Is that the engineering?
Yes.
Okay.
I mean, I had a C in organic chemistry. You know, I still don't like Dr. Tang. I don't know if he's out there, but I mean, that's such a hard class. Anyway, Org Chem and then Calculus 1 and 2, you know, they're bears. They will read out classes, and you should never take one at 8 a.m. ever.
When at 8 a.m.?
Yeah.
Oh, yeah.
Don't ever do that. So dumb people don't know those things early in college, and you learn them later. So anyway, so I had somewhere along the line just taken general business courses, and so A&M said, well, instead of re-enrolling into A&M, why don't you enroll into another school? Like not A&M.
Yeah.
And I go,
You're in our
like,
system,
I said,
right?
yeah, I said like UT, and she said, good choice. So I moved up to Dallas and transferred. I was still at Kroger, and I transferred up on. There's a Fiesta Mart, the Fiesta grocery store on Parker, and
Parker in Plano?
in Plano.
Okay.
That was a Kroger.
Really?
That Fiesta Mart, yeah, it was a Kroger, and that's where I transferred to. And I lived in a little house, and little apartment condos that were on 15th Street, my old building.
Yes.
15th Street, right down in front. Remember that old house?
Yes.
Right
by the block.
Across that street down the hill is a little apartment complex,
Yes.
and that's where I lived.
Alma?
Yeah, it's right across the Alma and Corporate or something. I don't know what it's called, but it's $285 a month was my rent, which was a lot.
That was a lot.
In 1980,
I wish I could get that.
I bet you can. You didn't even pay $600 with your wife.
I surprisingly in college I got a $600 near UTD.
Oh wow, yeah, okay. But I lived over at UTD too, so yeah, and I lived over on McCall. Yes, I lived in the Gables, and I lived in. Oh God, you're telling me. Yes, but yes, I lived over there, and so anyway, came up to came up to Dallas, worked at Kroger, and only transferred those grades. So I had to sort of start over. So I probably have 160 hours or something like that total. Only because I had extra hours now. A lot of them I didn't use, but so there's like 30 hours.
Total?
No. On UTD you see them, and at Texas A&M you could see them, but there's nothing. But that's how many total hours I ended up going to college. But CPA you got to have at least 133 hours.
I thought 150.
Today.
Oh, okay. I was like, wait, I like that.
Not in 1988. In 1988, you only
I
needed.
thought you just like in the early 90s, it was
My certificate's dated 9/2/92.
9292.
It's a date, and that's after my 2 years of working.
But somewhere at that point,
I know.
didn't it change?
I'm
You
glad.
needed 120 hours.
I don't-
You could take the exam.
Something like you had to have 120. I think that's what it was for me. Is I had to have 120 hours and 12 hours of accounting or something like that in order to sit and take it, because I took it in 89. I want to think that I took it in May of 89. I passed half and took the other half November of 89 in San Antonio.
Yeah, you said there wasn't any openings.
Yeah, so what happens is it takes so long, so once you take the test in May, you're waiting for the little envelope. I can't remember. Yeah, you're waiting for just a little bitty folded up envelope to say, Merry Christmas, here's your number. Or you get a big giant package and you cry.
Big giant package means you failed.
Yeah, well, you didn't pass it all.
Oh
It
man.
means you ain't done.
At least they tell you before having to open it.
Well, well, 'cause right, immediately. So I remember calling somebody and asking them, I'm going to the mailbox. I said, is it big or small? And she said, it's a large package. I said, okay, well, then I got to figure, and this is like, we take the test in May, and you don't find out until
2 months later.
August, no, maybe. I don't remember when. But I know that by the time I found out I needed to take 2 more parts, I had to call San Antonio. and pay my sister to go down to San Antonio and stay with her for a couple of days while he.
Were you studying in that time?
Oh yeah, well, so while still at Kroger, right at the very end of Kroger, I was about to graduate. I had an opportunity to go to Ward Halla, or Halla Marlowe, which is a small CPA firm, kind of like I am today. And they did mostly doctors. And so the last about 6 months, went from $11.50 plus overtime to $7.50 an hour. So I could take a job. I was making $11.50 at Kroger, and I went down to $7.50 so I could take an internship my last 6 months with an accounting firm. Some of the internships didn't pay at all, and I was like, okay, well, I can't do that.
Yeah.
So I took a 40%, 50% pay cut, or 40% pay cut just to go into accounting. And then I got my first job at BDO Seidman, paid $13 an hour.
13
an hour.
Wait, what's BDOC?
BDO Seidman's one of the large mid-sized firms here in Dallas. So there's Leventhal. There's a number of mid-sized firms, KBA. There's a number of them. But BDA, I don't know how big they are, 800 or 900 million worldwide. So they're big. But they were the first. So I spent 4 years at BDO doing taxes, audits, and bankruptcy. I sort of started in audit. Did audits, did taxes outside of the audit period.
Did you like the auditing?
You learn a lot about auditing.
About being very detailed and
Yeah. But it's all details. Our whole world is details. The only difference between auditing and taxes is I can round to a penny. I can round a dollar in taxes.
Yeah.
But it still all flows. It still all has to work. And so none of that really changes. But, so BDO Seidman, so I did audits. The problem with audits for me was unless you were going to become a partner, it takes so long to get to understand the business of the client because you're just doing their accounts payable or just their accounts receivable. So one of the things I liked about BDO Seidman was it wasn't KPMG, so, I wasn't stuck doing Coca-Cola, but they were smaller firms, but I got to do a few more things. Maybe the cash reconciliation in addition to the AR, somebody else was doing AP or whatever, you know what I'm saying?
Yeah.
So in audit, so they break it all down. But then we also did taxes, and then I spent about 2 years on and off working on big bankruptcy projects. And those are fascinating because usually there's the big ones, there's a whole bunch of money that belongs to a whole bunch of people that probably aren't going to get it. And so what happens is in those scenarios, it's a lot of analysis. It's a lot of prove ups. Well, I'm proving this up, I'm proving that, a lot of legalities, a lot of legal. But what happens is you become really, really detailed. I did a bankruptcy once that included, 200 or 300 pieces of properties, okay? So they were all on these different Schedule E's. You know how the Schedule E or the 8825 works, right? So all I did back then was built an Excel model that looked like the Schedule E, and I took all 300 properties off of all the 67 different K1s or inside those tax returns, right? And just took their lines, and I created one giant spreadsheet for them. Now then they could add them up and say, well, which ones are in, Missouri? Which ones are in this? And at the end of the day, they could then sort. And at the end of the day, I had put, which tax ID they went with. And so they could at least say, okay, well, these four on this under this company, I see they're blah. And then at least they finally understood. But I just did it in columns, and it went, lots of pieces of paper across. But ultimately, they shared that on a bunch of different bankruptcies because nobody could really, because what most people did was they rolled up each set of properties inside of every partnership or sole prop.
That took way longer.
Well, no, it was a lot faster, but they couldn't tell, oh, this is 4 properties, this is 6 properties, this is 2 properties. Well, aren't you going to sell all 6 of these at once? No. I might sell these 4 along with this. It's all in bankruptcy. They got options. So you had to break them in. So first they were just thinking, well, no, I'll just do them by assuming you're going to sell each of these 4, these 6, these 8. No. The bankruptcy trustee has full power to do anything he wants. So he could sell these 2. He could bundle these 2 with these 4. Well, that all flows to different tax returns.
Gotcha. I was just at a company and they were dealing with a big bankruptcy with healthcare. It was a healthcare management company.
Okay.
A bunch of,
it's not called QUIDA, is it? CWIDA?
No.
Okay.
PCP MG Consulting. Shout out to them.
Yeah.
And they had to downsize a whole ton because of there was a lot of legal things taken.
Yeah. Some of it's bad business, some of it's fraud. You never know.
Yeah.
So you never know about the bankers. Some of them are honest. They're honest bankruptcy. Oh, absolutely. Yeah. Think of about the 2008 period of a bunch of our clients, the people that had groceries, convenience stores, and gas shot up. The little convenience stores, the Exxons.
Yeah.
Okay? Think of, right?
Oh,
absolutely. And they've got gas and stuff. Well, in 08, 09, the property values were sinking because of the recession. Nobody was really buying at the convenience stores. They weren't getting any margin, but their property taxes were going up and their gas prices were going through the roof. So their margins on their gas were being hammered because the higher gas prices are, the less margin they make in dollars because they're always making 4 or 5 cents or 4 or 5%. But they, sometimes it's 4 or 5 cents, sometimes it's 5 or 6 cents, and they get squeezed as the price goes up. They are the guys that get squeezed. So anyway, a lot of those guys, a bunch of them filed bankruptcy. Yeah, it's not their fault.
Part of it, yeah.
I mean, and they, tried to figure out how to ride the operations. If they owned the land and building, they usually had enough equity they could do something. If they didn't, then the owner of the land and building usually had to close it down, sell it, get out.
That's a whole nother topic, is how to ride those storms.
Yeah. Okay. So after BDO Seidman, that's where I did learn a lot about the overall operation of an accounting firm at that point in time. What I also did, so at some point BDO Seidman, and this is one of those where I remember walking through a conference or by a conference room, and all the partners are in there. And supposedly they were signing bankruptcy papers. And I don't know if they really were, but they were talking about it. There had been a case against them in the early 80s, mid-80s. I don't know, and so it's a partnership, and so people are looking at legal. So anyway, there was a lot of nervousness going on. I got recruited out of public accounting into PepsiCo. Okay. So... And PepsiCo is a great company. You just sort of need to move into Frito-Lay, PepsiCo bottling. I was in the food service business. They had lots of different business units. It's probably cool analyzing potatoes. It might be weird, but if you were analyzing potatoes from 80 countries and the volumes and that's probably pretty cool. What I did for food systems was I analyzed cheese. I think they were buying about $1 billion a year in cheese, and I did quarterly reports on.
You were in charge of the cheese.
Charge of the cheese. So part of the 10K the 10K is done annually, and then there's a 10Q quarterly. I was responsible for writing the blurb. This year we did 247 million pounds or whatever, this many dollars, and we hedged this many pounds of cheese and
all
blah.
Extra notes.
All those nobody reads.
I had to.
Oh.
I had to read those.
No human otherwise reads that. I never got credit for writing any of that, So it's just the same blurb with different volumes and different reasons for, But that you learn a lot. So that's what I did for PepsiCo, and then telecom exploded.
So is this around 2000?
This is probably early 90s. So I got the CPA, my certificate in 92, And this is probably, 92 is probably when I got recruited, because once you get your certificate, your value goes up. And so, And so then Ericsson offered an opportunity to get into telecom, cell phones. Mm-hmm. There you have.
Yeah.
So,
Sony Ericsson.
Well, Eric, that's just one partnership. Ericsson, that was just one partnership on one set of phones. Ericsson's a giant company out of Sweden, huge. Okay. And they're actually building a new 5G facility here in Grapevine or someplace.
Really?
Yeah, here in Dallas, and to run the new 5G. You'll be able to run your phone as fast as that computer on 5G. I can unplug.
Ericsson, is that like
one of them? Yeah, one of the people building new 5G. They sell to AT&T. They sell the machines. They sell the base stations and the towers. They sell the connectivity.
Do you know who they are connected with, or they sell?
They work for Nokia. They work for AT&T. But I'm sure my guess is that's probably AT&T because AT&T is based here, and it's their customer list, and also they do Nokia, which has got a big office here. But 5G is a nice central place, and they usually use Dallas as kind of a kickoff place. AT&T does because they're based here. So it makes a lot of sense for them to make things here. But I just read that in the paper. They're about to start building that. So Ericsson was a great company. I enjoyed working for Ericsson. I met Susan at Ericsson. So Susan and I worked for the same guy. So she did HR and I did payroll. I mean, I did financial analysis and accounting.
For those of y'all that don't know, Susan is Larry's wife, who does the HR here.
Yes.
Patterson CPA LLC.
Yeah. So she also handles our operations with Amber.
Operations.
Yeah.
Correct. I've been away for some time.
Yeah, and pay, yes. Esmer did those things back in the day. Yes, we've restructured. But yeah, so anyway, so we get out of Ericsson. I decide to go to a small company, and I took the controllership or director of finance for a small company called Mobile Systems back then. They merged with this company called Mobile Systems or MSI, and they called it Mobile Systems International. Anyway, we sold a product and services, but the product we sold was a software product that fit on your phone that told the guy at the top of the tower how to turn the tower. Okay?
Oh, okay.
Does that make sense? So go up to the top of that tower. Point it that way more. Yeah, that's good. Point it up. No, too much. Down.
Instead of them having to yell like that.
No, they're yelling.
Okay.
They're just looking at a computer to tell what the guy what to do. They've got a walkie-talkie telling the guy. But the guy's in a software. He's looking at the software how to tell the guys. Now, of course, they got a lot more sophisticated back than they were. But early in the days, that's exactly what they did. The guy's standing down here looking at the unit, and he's calling to the guy on the tower to say, okay, point it that way. No, that sucks. Point it, and they just keep going back. They're engineers, so they kind of know where to point it to begin with. So then they're just dialing it in. Well, the software basically helped dial it in, which allowed you to have better connection, instead of pointing straight and only getting part of it, it's pointed down appropriately at the street or whatever.
And it needs to change constantly.
Well, now it's completely different than 1994. 1994, we carried a phone that's bigger than the
bricks.
Yeah. So huge bricks. Yeah. So we were excited to carry those phones. I remember when they finally got little, they got those little silver, one slid up, and they got really kind of cool.
That were in the car.
But all you could,
that's so cool.
Yeah, but all they could really do was make phone calls. And if you wanted to text, you had to type, Larry, which is I need, Bubba, L-A, R, you had to, something like that, crazy. So anyway, so what Mobile Systems did was they did something they sold themselves right before at the end of 1999 to a British company for $986 billion.
Billion?
Mm-hmm. Billion and a B.
Almost a trillion?
Almost a 986. No. So 986 million. Sorry. Almost a billion. Sorry. Right. No, 1 billion. Sorry. Okay. Yeah. Not if it had been a trillion, I wouldn't be here today. If it had been a trillion, I would have been gone. But almost $1 billion for the company. And the best, I think, maybe we lost 10 million, sales 150 million, things like that. But it has potential, right? And it's right, and the technology and blah blah blah. And so a company out of the UK called Marconi purchased us, and we was worked out pretty well at first. Marconi, though, sold off a lot of its hard assets that generated a lot of cash flow, so they got cash poor quickly.
Okay. Okay.
So what happens?
Go into why they did that?
Well, I don't really know. It happens to do with R&D. I wasn't really. This is a UK company, but essentially what happened is the cash on the backside wasn't kicking off the same rate of cash as the old assets that they sold.
Yeah.
Okay, so it's a math problem. And it happens. So they did what's called a restructure in the UK, and it's called something. There's a term for it. I forget what it is. I'll look that up. But we get almost $1 billion. But here's the trick: you had a choice. You could take your stock, which for me at the time was like 50 grand, 50,000 shares at maybe 15 pounds, 12 pounds, maybe $20. So maybe $1 million. Okay, I could have taken that. Just cashed it out, right. Taken my I'm only going to get 700 G's out of it, right? After long term, I'm going to only get $650,000. So you can't retire on $650,000, or they tripled it. So I went to $150,000 shares. Mm-hmm. And if the stock price went from 8 pounds to 16 pounds to 24 pounds, well, then 150,000 shares at $50, or back then $45, was retirement money. Okay? $6-7 million after taxes, maybe. That is what I had in the future after my 3 years. I got a check after about 30 months for $33,000. And I got a K-1 that said they gave me $40,000. And 10 of it went towards my taxes or something like that. And I had to pay tax on the 40 grand.
Oh my.
And I only got like 32 or something.
Were you getting paid in the meantime?
Well, I had a job. Okay, at some point, yeah, so let's figure that. So the timing is, that's when I started my own deal.
Okay.
So at some point, MSI, they got bought by this big company. They moved the accounting services to Pittsburgh. I'm also going through a divorce. I went out on my own and started what I have today in my bedroom. And that's probably what we could talk about next. That's kind of how I got to this, was didn't cash $5 million and retire. I started this business and been doing it for 20 years.
Sleeping well.
No, well, right, and yes. So let's do this. Where's my water? Then we can just tackle early parts of the business.
Yeah.
Getting started.
Yeah, like a lot of people that watch this, they're trying to find inspiration to start their own company.
Yeah.
So
Yeah.
people see your setup now, and they're like, "Oh,
how'd you get that?"
How'd you get that?
Right.
Didn't happen overnight.
No,
It
it
20 years.
Yeah,
You
yeah.
said it was 99.
Yeah. So that was about 2001 is when I really started to focus on the business. I had a couple of so I took a package out of them when they decided I didn't want to move to Pittsburgh. So I just took a package, and sort of went on doing this. I took a couple of other small jobs, kind of full-time jobs, but not really. I was really working on my business, but somebody called and said, "Hey, I'm paying 90 grand a year. You come and do this job." So I did that during the day, and then, at night I was building the business.
Right.
So I built it to, I don't know, maybe enough to live on without having to do those jobs. I don't know, $100,000 in sales, $80,000 in sales or something. So I built that, and then so in 2005, I realized I kind of had to make a decision. I was doing a lot of work. I was doing it all myself. I had to figure out how to grow. So by 2002, 3, when the divorce happens, to 2005, I'm just kind of riding along out of my bedroom. And 2006, I acquired Zahed Reza and Idrus, Habib El Idrus, right? Mm-hmm. Zahed Reza and Idrus. So RNA, I acquired them in 2006 and their practice. That's how I got.
How much did that cost?
So here's how it works. you in our business pay about 1.1, 1.2 to 1.3x of trailing 12 months revenues. Okay? Revenues. So if they're doing revenues of 400 grand, they want 450, 500,000. You're going to offer them 360. You're going to be funneling around 415, 420 or something kind of in that range. Does that make sense? That's kind of how that works. So what I also did is I went to the bank and I borrowed extra working capital. So I borrowed extra to have money for working capital, all of those good things. So what I did is I actually borrowed 450. So at the end of the day, we settled on some number, and $50,000 drops into my business account, gives me some money for operating. Like most small businesses do to me today, I immediately took $45,000 out of there and I put it down in my house, and had no working capital. And that's how, that's how most small businesses work. It's not advisable, but it happens a lot.
Well, it's good.
It happens. Yes, it happened. You're not a good thing. But I did have the house. The house did go down in value by $200,000 at one point, and now it's back up about $400,000 from there, and so we're back ahead of what we paid. But that's what I did to get my original house, and the one we're still stuck in because of the economy and other things. It's just how it works. But anyway, so that's when I acquired Esmer and Diane.
They were at that point.
Yeah, they worked for them.
Okay.
So I hired, Esmer was a clerk. She's early 20s, and Diane was an office manager, and I taught Esmer how to do what we do. And I'll give you one background, and we didn't talk about this, but in between some of this, and I can't remember what year it was, but how I learned this. And when I say this, I mean taking data from QuickBooks Online, Sage, Excel, spreadsheet, 10-column, receipts in a box, etc. I learned how to take all of this crap and make a tax return out of it. And what we found is, if they really helped us and gave us really clean data like QuickBooks, it's really easy. If they give us a bunch of receipts, it costs them an arm and a leg. And they're like, can I just not give you these receipts? Absolutely, your return just tripled. Because it doesn't make... Think of our friend that I let you work on years ago that had all those receipts in that box that didn't matter because her medical expenses were way over the limit and she didn't have any income. You spent hours going through all of them and learning what they were, and at the end of the day...
You made me go through it for 3 days.
We didn't need any of it because she didn't make any money. Yeah. But the whole point was, just because it's this big, the real trick is the next year it took you 14 minutes to do it. And the next year after that's like 10 minutes. That's really the learning curve in our business. And it sucks sort of in our business to have to go through that. But I learned it. Yeah. Yes, absolutely changing. But just the processes, how to get the data, how to get it from one point into a tool. So here's what happened. I have a good friend of mine, Steve Byard, sort of my mentor. Okay. So Steve Byard, and I can't remember what year it is, but he calls me. I had been doing part-time. Had another job, but I'd come down and work with him part-time. And he had what I have today. I don't know, but he had 100 clients instead of 1,000. Okay. And so he was using Pro Series back then. You remember ever using that?
I started off.
Okay. I got out of Pro Series in like 2012. Yep. So in Pro Series, he was using Pro Series, and this is back to 90s when I first started. So he started on QuickBooks and also Pro Series. So I've been doing returns with him back into the late 90s. Always using the same model.
Tax software.
Tax software, yeah. Pro Series is tax software. Most of his clients were on QuickBooks, and we were using Pro Series, which is now owned by Intuit. So we use Pro Series. It's a great product for small CPA practice. It's inexpensive. But what we found was getting the data in there was a struggle. And so what we found was we started building things like Excel spreadsheets, telling people we would not accept their receipts, but giving them a spreadsheet on how to enter them. Just how to streamline. And then people that spreadsheets got big, we started putting them on QuickBooks and sell them in accounting services, teaching them how to use QuickBooks, et cetera, et cetera. So what we did is we got most people out of Sage, most people out of spreadsheets, and then 10 columns, of course. Back in the day, I still have one gentleman that brings me a 10 column today.
The paper?
Yes. Yes, it's got 10 columns across the top. And the client writes income, and then over here he writes car, and then he writes his mileage, and then he writes, and they're all written in here, and then they're summed at the bottom.
Little boxes.
And he circles them, yeah. Some are business, some aren't, some are personally. He writes he just uses 10 columns. I didn't know they even made them anymore. Anyway.
Oh, no, they do. I know a few people, but they're like 80 and still doing.
Yes, yeah, that's just funny. Yeah. So Steve kind of taught me how to do it, if I want to say it. How to build the folders. You remember in the old days we had those blue folders that opened up, and we 2-hole punched them. Why? Because we didn't have giant scanners. Remember, this room used to be full of file cabinets. We could take a picture. Let's do that now. To the picture in the attic of still old boxes that are exceeding that are still there. We can take a picture of that. There's probably still 200 or 300 boxes. Today we build. Oh, absolutely. You helped me put them up there.
I know.
Yeah. So anyway, we probably need to go through them this summer and help me take them out.
My question on this,
Yeah.
why the summertime when it's the most hot?
Yeah, good point. Because it's after busy season and I've stored my last pieces. So yes, maybe we should wait for the fall till it's a little cooler. I get that. I'm not, yeah.
It's a good workout.
It is a good workout and they were cleaning.
Yeah.
But anyway, so Steve was the guy, my mentor kind of started this.
Mm-hmm.
Steve called me and sorry I can't remember this year, but his dad passed on like February 3rd, like 2000 and... I still had jobs back then. So I was still working a full time. I was still doing my business, but maybe 2002. He dies. Anyway, so Steve's a small business like I am. Steve immediately leaves on 5/3, has a massive heart attack, unfortunately.
His dad? Or
His dad. So he immediately takes the family and they drive to Arizona. Steve's dad and my dad were friends, so I hear about it. Oh, I'm so sorry, can't believe that. He calls me like 3:08. And he's in the car or something, or he stops someplace. He says, "What are you doing the next couple weeks?" He says, "I haven't been home since February 3rd. I probably have 100 tax returns on my doorstep.
Yeah.
I've been dealing with my dad, been dealing with my mom, all this stuff. What do you do in the next couple weeks?" So I had a real job. I forget where, McAfee or someplace. Mm-hmm. I took 2 weeks off, and I slept on his couch for like 19 straight days. From like 3/8 to like 3:21, I slept on his couch. And we rotated who slept on the couches and who rotated who went in bed. And throughout those 19 days, we did nothing but hundreds of tax returns. And that's how I learned how to do this business. So here's the deal. Someone like you today comes to work for me today. I need you to do 100 tax returns this business season. How are we going to do? 1,000. So I need you to do 250 of them. Why? Because once you've done 250 of them, you're tired of this and go get a different job, or you figured it out. Yeah. Does that make sense? Absolutely. And it's sort of like the thing we dealt with.
That's college, the 215.
Right, that's college. That's your MBA in taxes. That's exactly right. And whether you do 100 of them back in the day, like I did at BDO Seidman we did Fast Tax. That was a product back then. Mm-hmm. Fast Tax before these Intuits, and we had a screw, and it was the computer was only about this big, and the screen came off, and it was black and white. it was not black and white. It was thin, but it was, and you moved your cursor across. Yeah, it was like text. Yes, it was like a dot matrix printer.
Yeah.
So, yes. So anyway, so that was that's what we started with the media. Then, like I said, Steve got me into Pro Series. Once I understood Pro Series and how to package them and how to put them together, I just continued that kind of even till I'd been doing it before, but once I did.
You started that in 2002?
Well, that's when I did that. Whatever year his dad passed away is when I did a whole bunch all at once. And that really got me. I'd been doing 40 a year, one a day, two a day, not like you do 100 or you do, 150 of them in a 15-day period, and you're working till 2 or 3 in the morning. Some of them you're fixing QuickBooks. The QuickBooks was a mess, so you're sitting there fixing QuickBooks on, because that's all we had. We didn't have, today what happens? I print the QuickBooks, I circle, or I circle the problems. I say AR's not right, this AP's not right. You guys, AB, go figure this out. Susan, Amber, somebody go figure this out. Go figure out what's wrong with this account. Amber's really good. Amber has her master's now. She's going to work for her CPA. She'll probably stay more on the operational side, but she's got to do a couple hundred tax returns. Why? Because if you processed a couple hundred tax returns, dadgummit, you pretty much have it down. Because it gives you enough examples.
She's done well over that much. But.
Yeah, I understand, but still. Still a lot of them are the ones she does. It's not a lot of variations like, a trust that flows into, or I have someone passing away. We have 8 or 9.
1040 and then doing 1041.
Yeah. We have 8 or 9 people pass every year, unfortunately. And so you're always dealing with, this is what a 1041 is. This is kind of how that works. So I kind of ended up doing my own thing, partly because I kind of like
running your own show.
Yeah, I've never been a really good employee, and being an employee was not going to school is not one of my best things. Yeah, sitting there having someone tell me to. Yeah, I could tell you some stories about telling. I think I was 4, and Grandma brought me one of those little blue shorts and the little blue, and then the little white shirt for Easter. And when Mom came to say, let's go, they couldn't find it.
What'd you do with that?
Well, I couldn't find it either, and I forgot. So I think I got to wear pants that had pockets in them because that would have been a tragedy if I hadn't. But 6 months later, when we moved from this little apartment, they picked up the twin bed, and in the very middle of the twin bed, those clothes were stuffed. In the very middle of the bed, not on the edge. I swam in the middle of that bed and put those on. So I've been a little hard-headed all along. But, in this kind of stuff, you have to be a little bit, because here's the deal. I have to tell people all the time, I think you would be a little better off paying a little more tax this year, not depreciating the whole truck all at once. And we can go through lots of examples of what kind of companies they are and why you should be an LLC S Corp or why you should be an Inc. S Corp or what of those things. We can kind of go through some of those, and I've got some graphs and stuff to show you. But we can also talk about the tax business itself. One of the things about the tax business is this chart is what we have to deal with in our friends at the IRS. And bring that up for everyone to see. And what you'll notice, show the whole thing,
Yeah, let's zoom out.
This is the entire.
It's the entire.
Yeah, make it. Oh, okay, I see. Yeah, it's just showing. So yeah, they're making it a little smaller. There you go. There you go. Nobody can see it, but anyway, they can see how big it is. Drag it to the bottom. So basically what this does is this starts at the very end. This is litigation, and that's where a bunch of attorneys make money. So anyway, at the very top, this is what we do. So get right here, taxpayer begin filing process. Okay. So number one, what does it say? It says taxpayer gather tax information. Do you know what really should be? There should be a spot right here, right here, that says, please don't call CPA and ask what tax documents we need.
Yeah.
Please don't call here. Yeah. They all on the envelope say tax documents. Gather them. It's not rocket science. So yes, so what happens about 30% of the time is we get a phone call here, or we get a client that wants to come in and say, I have these 70 documents, Mr. CPA, that's charging me $300 an hour. And I say, let me give this to my staff, let them do what they're supposed to do with it, and I'll send you a return in a couple of days. Because I'm only spending, in many times on these returns, 15, 20, 30 minutes, not spending an hour sorting documents. I have no time to be sorting documents, and neither does a CPA. The small CPA today spends a lot of time sorting documents, and that's a tragedy. So we can teach them, we can teach some of these people some of the tricks of how to get documents ordered, how do we build our folders. I stole the folders from who? Steve Byard. I did the blue folders that are built today. I stole those from Steve, okay? They're not rocket science. I didn't make them up. They say 2019 on the outside because Steve liked them to say the year on the outside. And his were blue also, but he bought them at the store and he put a little label on them because we were cheap back in the day. So anyway, so if you start tax gathering information, this is the key. And what happens is this happens really late in the game a lot of times. The next thing is it says taxpayer seeks answers to tax questions. Okay, great. I don't necessarily have this, but the second step, pull that down just a little. You can see down. You can see here. That should be the process where they come in and we're answering questions on a draft. So I would argue that this next spot right here is send the clients a draft that need a draft. Okay?
Send a client a draft that need a draft.
Okay, yeah, so you're a dad, you're a cardiologist, and you have 3 kids. I'm probably not sending the 3 kids' returns, even though they're 16, 18, and 19, who are in college and make $6,000. I'm probably not going to send him a draft of the kids because that doesn't make a lot of sense, But sending him a draft of his business return and maybe his personal return, then he's got taxpayer seeks questions and answers, then this is valuable. But until we get information, this doesn't do me a lot of good. I had a client today who's got a divorce, got all kinds of things going on, sold a business, and she's asking me all these questions, and I said, on the phone, and I said, honey, can you send me some docs? And she goes, like what? I said, well, when you sold the business, didn't you get a closing document? She goes, of course. And I said, do you have bank statements? Of course. And she says, and I have the mortgage statement. I said, now you're on to something. And you're still back here, and I'm on the phone with her, charging her $250 or $300 an hour. Mm-hmm. And so part of it is education to the client. Yes. Part of what we have,
learns that in college.
Nobody learns anything in college, about how to teach your client to give you the information. Back in the early days, as I mentioned, Steve taught me, if they're in receipts, charge them so much that they won't be in receipts. Yeah. And we just kind of did that. And I would tell them, eventually, I would tell people that come in on February, and said, at last you just charged me a lot. Can you just do it this one last time? And finally I said, no, we don't do any receipts at all. We just had to put our foot down. Mm-hmm. We're just not going to do it. Yeah. It's just too expensive. Yeah. So, yeah. And so anyway, so we get down to the bottom. There it is, the IRS.gov. We can ask questions. There's phone lines if we have questions. There's the client, the taxpayer can do all these things. Tax assistance. There we go. Tax return prepared. Now, this is all the same as all these other things. All of these are where the clients get information. Okay? It's just that this is where they should get my information and start me drafting the return and answering questions versus me.
Use this mouse.
Oh, okay.
Run to the bathroom.
Oh, okay, yeah. That's great to know. Hope you're gonna cut, please. Sit down, Joe. So this whole section here, people can see. It's all advice. It's a different kind of icon. So the tax return can be filed by the deadline, yes or no. So, if not, we file an extension. And then the tax preparer prepares it either before or after the extension. And we then, whoever did the return, you pay the preparer, or you've paid TurboTax, or you free file on the website of irs.gov, which people that make less than 30 or 40,000 can go on there and do it for free. So then it's generally we file these electronically, and then basically we're done. We get an e-file acknowledgement. It passes all the filters, and then here it gets processed and accepted. So then we're done. So if there's ever an issue, it's all an issue at the IRS. You can make this smaller now, or hold the control key down. Hold the control key. Yeah, I'll make it smaller. So what'll happen is this flows out of this process here, and ultimately starts with the IRS. If there's an issue, also you can get this at the Taxpayer Advocate. You put it on our website also, post all this, yeah. But this can be used, so this is all bad, okay? 99.9% of all tax returns are finished at this level here, the processing assessment, yeah. At this kind of assessment level here, that we usually find an issue. What do we find? The taxpayer forgot to give us a 1099 dividend. A taxpayer didn't give us, something else that we needed. A 1099-R they forgot about. One of the big things is they forget about the 1099-R when they cash out a 401k and they but when they had a little loan in that so they only get 20 grand. They forget that the whole account is 30 grand. They get a 1099-R for 30 grand or for 20 grand and 10 grand, and they get taxed on the whole 30,000, and they only have $20,000 to show for their money because they got out of it and they forgot, I forgot that I had a loan. Well, and the loan gets canceled so if you leave a job that has a loan and a small balance, they may make you cash that out. And those get forgot a lot because a lot of times the client will say, but I also had 10% withheld, so isn't the taxes paid? No, the 10% withheld just goes towards the whole bucket. Mm-hmm. Your taxes always go into a bucket. Yeah. Always go into a bucket, as long as they're personal, right? We talk about business tax, but if they go into a bucket, whether it's your estimated tax payment, whether it's the withholding that comes out of your W-2 or anything like that, at the end of the day, all that stuff is all part of the bucket. That's the $11,000 you paid in. You owe them $10,000. You think you're getting $1,000 back. No, you gave them $11,000. They just wanted 10. You're getting your money back because it's your money. So if you're really smart, the next year that you know how this works, you change your W-4, and instead of putting in 11 grand, you've only put in 9,200. You still owe $10,000 and you know it. But this year in April, you write them a check for $800. Instead of them sitting on your 1,000 for a year, you sat on their 800 for a year. Great. That's how you really should do it. Most don't. The rule of thumb would be always owe them $999.
Until it's due.
4/15.
Yeah, 4/15.
Yeah, right. On 4/15, everybody in the world owes them $999. We would eliminate all the penalties.
Is it this year? This year it's 4/15, not 4/16. It's a weekday.
Yes, this week, right. But the 3/15 to 3/16, so the C Corps and the S, and we could talk a little bit, we can break down a little bit of, so when you say we have 1,000 clients, what does that mean in English?
1,000 people paying you money.
Yeah. Here's how it's really broken down, and we can break this down, but basically we do things in 5 different buckets, and what we do is we focus on helping the small business guy, right? The small business guy is the guy with the most needs and pays the most taxes. and I'll throw this out and we'll do this on a form for you. But I did an analysis of adding up the taxes that the small business guy pays, and it's important. It's terrible. So if you have a small business guy that takes $100,000, makes $140,000 total, got $100,000 of taxable income, he's paying about $33,000 a year in taxes when you figure his FICA and what his company pays in his match, what his federal income taxes, which are only $9,000 or $10,000. Well, the guy's out $33,000 when you look at all the money, or 30, and part of it you go, well, FICA counts as a tax. So does your income tax. So does your property taxes that's now capped at $10,000. And of course, you pay sales tax on anything you buy. All those go to government agencies. So even if you're making $100,000, there's a good chance you're only taking home $60,000. 60. So at the end of the day, just, taking home 60. So if you make $200,000, you're taking home about $124,000, but paying $76,000 in taxes. Okay. But if you make $400,000, you could be netting about $260,000, and basically your tax rate starts going back down. What I'm saying is, it does this curve as your income goes up. And I'll show you this, and we'll show it. But basically, there's a point in here that the small business guy lives in. Okay?
For those just listening, he drew a graph and explain the graph.
Yeah, so what it does is it says that if you make no money, you owe no taxes.
Yes.
So this is basically your rate, and this is basically your income. So this is your tax rate. So as your income moves across and it's here, then this is your rate. And then your income's here, it's at this rate. And then as your income is here, it's this rate. So my whole point was, if this is $400,000 and this is $200,000 and this is $100,000, and we'll put it on the web, basically what happens is your income goes across the bottom of the graph, the rate you pay starts dipping, and that's because of all the things. You don't have a bigger giant house. You don't pay more in Social Security and Medicare because you take more K-1 distributions, that kind of stuff. You have passive income because you're Warren Buffett, things like that. So, right, what happens is, so what your effective rate is as a small business guy really normally feels around 40-45%, and that's what my small business guys really feel. So I'll give you some things that we do that helps the small business guy. First, we'll put this out there too. We do bookkeeping. We tend to do it in QuickBooks, either desktop or QBO. We also do payroll services. And how do we do that? We also use an Intuit product, but the Intuit product is called Managed Payroll. It used to be called PayCycle. So it used to be PayCycle, and PayCycle guys, they sold it and they changed the name. And the PayCycle guys made lots of money. And they started Xero, I think, is one of the products they started recently. Oh, really? Yeah, I think they did. So now it's called Managed Payroll. It's owned by Intuit. We love it because it's all integrated. Yes. It all flows directly. Yes, it's beautiful. 10 employees, 20 employees, 30. Everything flows to the right place. It's very nice. We also offer, staff consulting and training. And what I mean by that is we have clients come in all the time and sit with you, maybe, staff accountants, with my wife, with Susan, with Amber, or one of the other staff, Julie, to sit and go over QuickBooks training. And we offer those services at various levels, various prices, depending on what's needed.
Instead of the firm doing all that QuickBooks work, have someone internally.
What happens is they already do a lot of times. They are figured. Think of the doctors that we have. How many doctors have their wives write the checks? Yeah. So we taught them. Mess it up. Yeah, I know. Yeah, I know. Yes, I know. Teach them. Oh. So what we try to do is teach them, and we try to add some money in there and say, hey, let me teach you some of this when we find those. Let me send somebody out and train, do that kind of stuff. So we also then handle the year-end tax returns, 1120S, 1040 for just personal, 1065, 1120s, We have a number of 990 nonprofits, a number of 1041s, trusts, so those kind of things. So we have all of these different kinds of tax returns, and those are priced based on the effort. And you have a big tax return that somebody's got 300 fixed assets, then they're more, they buy 20 trucks a year, and that might be a $15, $18, $2,000 return at the end of the day with all the time to make sure the depreciation and make decisions on each of those assets versus a typical doctor who might have a return that's $800 or $900 a year. That's basically all it is cash. Yeah. It's just cash basis. The wife pretty much wrote all the checks. She didn't make too many mistakes. We looked at the reconciliation. It's all in there. Boom, we knocked that thing out. That's how we take that and make some money on it, because those clean tax returns I can do. So clean returns is one of the big things. We're not big on clients that walk in with a bunch of boxes and say, can you help us? We can send people out during the unbusy season and say, let us come out and show you how to do all this. But doing all of it isn't really, so clean returns is important. And we get clean returns from lots of clients. And what I mean is the QuickBooks is clean. The only thing they haven't done is depreciation. Think how many times we've had to call them. That's great. If they don't know how to do depreciation, so what? We'll make sure it gets back into QuickBooks. Yeah, journal entry, exactly. So beyond that, I offer, and my wife offers, and Amber offers, different sorts of levels of consulting. Mine is in CPA. My wife is around HR. She was at a doctor's today. He needs to let somebody go. So it doesn't know how to do it. Hates to fire people. Unfortunately, my wife is really good at firing people, and she's told me that many times that if I'm not careful, I might get fired, and we'll see how that.
Be the next Steve Jobs.
Yeah, it's her own company. Yes, yeah. So we'll try to keep her from doing that to me. But anyway, and then we do some other. Amber will do some consulting around deep dive training. We've had some real estate clients that want to train somebody that has a whole bunch of real estate properties. You know how we add classes in QuickBooks? Yeah. We'll go through and do some of those training. Does that make sense? Yeah. So we do those 5 things: bookkeeping, payroll services, usually less than 100 employees for payroll. We usually do most small businesses. We do staff consulting for training internally. That's either a yes or no. A lot of these small businesses don't have somebody that does it. We do it. And then the tax return is the big item to get that to be correct. And of course, the tax return feeds the 1040 where you pay your tax money. And that's where the consulting comes in, depending on things that clients need to do. Buy a vehicle, buy a new piece of equipment for their medical office, their law firm, whatever. And that's so what we do for our small businesses is we package these. And so a typical doctor might pay $300 a month or $250 a month. That's $3,000 or $3,600 a year. And he might be paying for QuickBooks Online because he wants his wife to do it online. And we'll wholesale the QuickBooks Online. And we just charge them a flat monthly fee. $300, $400. We've got clients that are as big as $2,000 a month. But most of these small businesses are, we've got as small ones as little as $75, $60, some of them we're only doing their payroll. And we do a simple $300 tax return at year end. So what most small businesses don't know how to do is they don't know how to go buy accounting services. They let people come in and be their rent a CFO for $1,000 a month and say, oh, go buy ADP for $212 a month. Go ahead and buy QuickBooks or Sage and do this, buy this. And then when you look at your overall cost for this list of services, you're paying $1,400 a month. And I'm coming in going, no, I could do this for $500 or $600 a month. Yeah. And I'm going to add 2 hours at the end of the year talking to me, not an hour a month talking to somebody else that's not answering your questions because they haven't done 100,000 tax returns. Does that make sense? Absolutely. So this is really one of the things that we put in these packages, and we'll put anything from 10 minutes a month or 30 minutes a month to an hour a month, depending on how active the client is, what stage they're in. They're just doing a new acquisition. We were doing some of that stuff when there was a bankruptcy or a litigation. We were $8,000 or $10,000 a month helping the one client. That's because we were doing everything internally because they were having issues with the ownership and stuff. And we went and just basically outsourced the whole store and did everything for 6 or 8 months until they could. Otherwise, it might have been completely jacked up, no sales, no inventory, and the business was gone under. So we were working with a trustee in that particular. So we could do those things, or we go in. Initially, we went in there and we just were training their staff. It was so voluminous, they realized they couldn't, and the trustee realized it, and he said, I need to make sure it's right, because he could be in trouble with a judge.
I know who you're talking about.
Yeah. So anyway, this is the service package, and we have sort of a real strategy that we kind of adhere to. And one of the strategies that I've gone over with a number of clients is, you can look at this a little, but what this does, and we'll build this another one, but basically what this says is a graph, and I'll explain it. It's simply a graph that is 0 at the axis, and this is your dollars of taxes paid, or your income tax, your taxable income. Think of it any way you want to. It's your taxable income of 200, or it's your tax of 30 grand a year. Yeah. Okay, because 200 grand is going to generate 30 grand in tax, and I'm worried about the 30 grand more than anything.
It's the bottom line.
But it's the bottom line. But the client can't think in $30,000 taxes, but he can think in net $200,000 profit, because he takes an $80,000 W-2, he makes about $80,000 or $90,000 in his K-1, he thinks, and he's got a piece of property that makes him $15,000 or $20,000 or $30,000 that he rents from, like I do, and he's got all of these things, and he's trying to figure out what's the best graph per year. And here's what my argument is to so many people and so many CPAs today. So many people today believe that year 1, year 2, year 3, year 4, year 5, year 6, year 7, that whatever your actual income is, they want to reduce it with every available deduction that they can find, even to the point of going negative in a year. Okay?
Yeah, a loss.
A loss, right. So year 4, year 5, they start running out of these things, and this is where they're at, and this is where they're at, and they're running out of things to play with, okay? So this is what normally these graphs going down, that's what the normal CPA does, because all he sees is this year, okay? That's only the year that he sees. I argue that that's bad business for my client. Yeah. What's really good business is to ask him, what is it going to be in the end of 10 years? Well, Larry, I told you, I take an $80,000 salary. My K-1s kick off about $80,000 to $100,000 a year, depending on what's going to go on. My property issue's about $50,000. Doc, that sounds like about $230,000 a year, give or take a little. Mm-hmm. Doc, after your standard deduction, I want you to have this graph. And this graph right here is $200,000 a year. It says 80 there, but in my example, it says across the board, $200,000 every single year. And so if he makes $230,000 this year, I want to find $30,000 worth of extra expenses. I want to meet with him in November, and I want to tell him, you look like you're at target for $230,000. I need you to come up with $25,000 to $35,000 in deductions. He comes up with $35,000 in deductions. I look at his prepaid expenses, or I look at his accruals, and I adjust it by another $5,000 and say, is this really the number? We come in at $200,000. The next year, he comes in at, sorry about that. He comes in at $240,000, and we find a way to get him. The next year he's at $195,000, and I want to raise him up. And I get to pretty much gist that this doctor, he's going to make about 2 bills a year. I'm pretty comfortable with this. Because here's what happens when he doesn't. Take this example. So the line that I like is the straight line. Okay? Consistency. This line I don't like, because this line, another CPA allowed him to lose $10,000 that year. not make 80 grand. This was this example for a client. Not make 80 grand, but he lost 10 grand this year. How much benefit did he get for the loss of $10,000? Almost nothing. Because it brought his overall tax rate down to almost nothing. This particular client.
Yeah.
So he has $10,000 worth of deductions. He actually has $90,000 worth of deductions. Because the whole thing, I want him to be at 80. He took a $10,000 loss. He has to make up $90,000 before the end of 10 years. He's going to make up for it over here. In 2017, this is 2027, I'm posting $50,000 extra money he doesn't have because he took the deductions back here. He doesn't have this $50,000, and I'm charging him 45 cents on the dollar in taxes on it. So he calls me and says, how can I be charged $22,000 on my 50 grand when I saved zero taxes back in 2019? And I say, blame your previous CPA.
Gotcha. I'm with you.
So what we have to do is when people walk into our door,
It's advising them the realistic
long term, here's the deal.
You're gonna do taxes every year.
Yeah, most likely. If you're a small business guy and yes, the first couple of years your accountant has done you the most greatest job. I made 40 grand in cash and I paid no taxes because they wrote a bunch of stuff off that are going to turn around and bite you, man. Depreciation, prepaid expenses, accrued, any of those kinds of things typically are the difference between cash flow and what real income is. We really want taxable income. Bonus depreciation. That's how some of these things happen. And you go, okay, bonus depreciation. So when they in 5 years make their payments on those vehicles they still have, they say, I made $20,000 worth of vehicle payments. Larry, please show me my deduction. I go and pull out the 2019 tax return and I say, here it is. And they go, show me how much money I got in this 2019 deduction. And I say, this K1 flows to you personally, and this personal flows over to your personal return. And let me watch this. Let me pull it up on my computer and watch me take it out. Watch your tax rate, your taxes change. Larry, nothing happened. I know. You got no benefit for that $25,000 loss in 2019. But this $25,000 now cost me $11,000 in taxes because it's, or whatever, 38 that because of whatever tax rate he's in, whatever the scenarios are. Does that make sense?
Absolutely.
So from a small business perspective, what we teach our small businesses is one, let's try to figure out what income is your income. Now, I do realize let's take that your sister comes in, the one who's going to be rich, and she comes in when she gets her vet license, and she says, Larry, I'm only going to make $60,000 a year as a vet. And I look at her and laugh and giggle and say, okay, Anisha, we'll set it up at that. 60 or 80, she's going to make more. So she may have a model that after a couple of years, we have to re-change our model. Because this model really isn't realistic anymore. Because she's now added big farm equipment or big farm animals or whatever, and I'm readjusting her model. So now I want to see her at 160.
And you evaluate that every year at that November meeting.
Well, I try to assess. Yes,
I mean, if they're not giving you the information, then you can't.
Well, right. It's not hard to analyze it. Right. It's hard for a client to say in December, not a doctor, but it's hard for a client to say, I have a client that will be a good example. We're actually involved in the CBD product I was telling you about, ybbicbd.com.
We'll get to that.
Yeah, sure. So we started this, and we'll talk about. So it's actually my sister and my daughter. My daughter's doing the websites and stuff. But anyway, what this is I got involved about a year ago. A client of mine says we're getting involved in this, and I said, okay, is it legal? Blah blah blah. Here's the thing: there's a new act coming out, and blah blah blah. And I learned a little bit about it. I called around and he goes, you're missing an opportunity right now. I said, I hear you. That's good. So at the time, there was only about 800 people involved at the time around. Okay. This guy alone has about 10,000 people in his direct line below him now. And it kicked off about $750,000 this year versus $24,000 the previous year in his commissions. So guess what happened when you're drumped with $750,000 and no overhead? You buy really nice Jeeps and you put the logos all over them, and you only drive them out to events for your CBD because that's the only expense he can have. That's a good problem to have. So anyway, so my daughter, we're involved a little bit of that, but my point is we're helping them on the business side, but we're helping these small businesses set up, get the website done, also get them the understanding of they're a sole prop. Because here's what for the guys who really want to build a CPA practice, here's what my business is. My business is very simple. My business is telling that guy yesterday, this guy that did this, because you were a sole prop, you're subject to 15.3% self-employment tax on 100% of all your earnings. Okay? Mm-hmm. So it's $750, it's $800, it's $700, it's $500, whatever it comes out to be, 100% of your earnings are subject to self-employment tax. Also, you can do some other items like an SEP and some other things, but you got to pay sales tax on all this money. What happens if you're an S Corp, and that's what the vast majority of my clients are S Corps, just like I'm an S Corp. And we'll go through an LLC S Corp, a Corp S Corp, and all that other stuff of why they're the way they are. And we have a chart for that too. And I'll do this and we'll explain this of how this kind of chart works. But what that chart does for us is it analyzes the type of federal return we need to file. Make sense?
Yeah.
And what it says is you create a company in the state that you're in. Okay? Mm-hmm. We happen to be in Texas, but people could be listening in any state. It's in the state they created. And the options are you could be an LLC. You could be a corp or an Inc. or a nonprofit. These all come out of this level. Or you could be a partnership. And this is the one I want to draw also. Yes. Because this one's cool, because as you walk through this that you can see, walking here on the left, the top two have limited liability. The bottom two do not have limited liability.
For those listening, that is the 1120.
So the LLC and the Inc. or Corp have limited liability. The partnership and the sole proprietor do not have limited liability. These have limited liability. These don't. Okay? So partnership. So over here, we'll talk about the federal filing. So here's what it says. If you don't do anything, you're a sole prop. And you automatically file Schedule C or Schedule E or Schedule F on your part of your 1040. Okay? Part of your individual tax return. What we don't like, the partnership goes on Form 1065. And what we don't like is both of these, not only do they not have limited liability, but both of these also are subject to 100% of the earnings are subject to self-employment tax. Okay? Mm-hmm. So not only they don't have limited liability, but they also are subject to self-employment tax. So if you happen to create an Inc., that's where your 1120 or your 1120S, this is also where your 1041 gets created, now that's an estate, but this is where your 990 gets created. So other things get created in here that start with an 1120, okay? So what happens is, but there is no LLC tax return, right? So that's where people get really confused. There's no LLC tax return. So the federal government, this is on the Fed side, so you can see here. The Fed side, we're not going to create a new return. Mm-hmm. So what the Fed said for the LLC is, we want you to file, if you're a single member LLC, just like you're a sole proprietor. So that's one member. If you're two members, we want you to file and or plus one member, we want you to file a 1065. That's what the federal government wants. Now, you would have limited liability, but you still would be filing the tax return that has 100% of all of its earnings subject to self-employment tax.
Correct.
Of course, because the federal government wants money.
Yeah.
Okay, they also gave us a form called an 8832. What that allows us to do, think of something like Chrysler. Chrysler couldn't be a partnership if they wanted to be, right? Because they have millions of shareholders and they have shares for middle of the year. So I want Chrysler to give me the profit they made for June 3rd through June 18th for only my 13 shares. Ain't gonna happen.
Yeah.
Right. So they're a C Corp. So what happens is the 8832 allows the LLC to come up here and be an 8832 that allows me to file the 1120S now and be a C Corp. This made the C Corp election. I made the election for the 1120. That's the only election you can make with the 8832. You make the 1120 election. So now the federal government says, great, I got you double taxed. Because 1120 is what Exxon and Chrysler and all these giant companies are, and they have double taxation, right? We have Form 2553 that converts us to an S Corp. So I own an Inc., Larry Patterson CPA Inc. in Texas, and it's an S Corp.
I thought it was LLC.
No, time out. That's what I created in 2006.
Gotcha.
I'll show you the box. We'll post a picture of the box. It says Larry D. Patterson CPA Inc. It started out as an Inc. and said be an Inc. And I said file 2553. So my Larry Patterson CPA Inc. files an S Corp. My Patterson CPA LLC, when I bought this building, they asked me to reincorporate my practice. So I did, and they said, you want to be an LLC? And I said, I also want to be an 1120S. And the attorney says, I don't care what kind of tax form you file. I said, okay, well then I filed the 8832 along with the 2553 on the same day. And both my LLC and my Inc. are S Corps.
So you filed two returns?
Larry Patterson CPA Inc. is a different corporation with a different tax ID. It happened to be created as an Inc. that I converted to an S Corp. So yes, I file 2 returns every year. Because it's an Inc., I have to file an Inc. Or I could dissolve it, but I just keep it alive because I could use it.
Yeah.
I keep it in dormant status. And so I filed a $0 Inc. tax return. So I filed 2 1120S's. One is for my Larry Patterson Inc., which is 0. And then I filed, so then let's talk about the next step. I own the building. I own the building in an LLC. A 2-member LLC. Do I want to file an S Corp? No, I want to be a 1065 just like the LLC wants me to be. Why? Because it's passive. My building is passive activity. It's not subject to self-employment tax. Leaving that at a 1065 is easy. Leave that at 1065. My wife and I get a 50-50 K1 at the end of the year. It's all passive income. But we don't want to convert that to an S Corp and have the problems of S Corps because it's not an operating business. It simply is our building and it's passive. And what form inside the 8825 is it on? I mean, inside the 1065, it's of course on the form 8825, just like our building would be if we owned it individually, it would be on Schedule E. Make sense?
Absolutely.
Okay. That's half of the battle of understanding these things. So
everyone is able to keep track. You're getting in the lesson today.
Yeah. So what we'll do is we'll post a couple of these.
Absolutely.
And what on the bottom of this I did a couple of examples. And what the examples are doing is it's basically saying if I made $120,000 and I'm an S Corp, and I took $50,000 in a W-2 and $50,000 or $60,000 in a K-1, I would save 15.3% of $50,000, the $50,000 K-1 or so I would save $8,000 or $9,000 by being an S Corp. The downside of the S Corp is it must have payroll because these are usually operating businesses. But we offer payroll services, and we do those. I do a number of clients once a year. We come in, they make a small business, they're only making $20,000, $30,000. And we come in and tell them, hey, we'll just do a check in December. They come in November, they've made $35,000 net, $20,000. I say, look, you're going to owe $2,000 or $3,000. Let's just do a bonus for $6,000 a W-2. Send them $3,000 on the Casey in the office does that. Boom, that guy's pretty covered. So it can even be small businesses that do this. It's just a matter of what most people think is sole proprietor is cheap and easy. Absolutely. But a sole proprietor, once it's made more than about $30,000 or $40,000, think of half of the profit could be in a K1. So even at 40 grand, 20,000 a K1, 20,000 at 15.3%, that's $3,500 just on somebody netting 40 grand. That's a guy, a plumber, lawn guys. There's people out there making 40 grand doing accounting consulting net. So they need to be an S corp. It's just that most people are scared because then we need real books. We just use QuickBooks, and then we really need so we can do good accounting. And then what we need to do is then say, hey, your dog walking business is not making 40 anymore. You're making 50 or 60. Now you're making, you shouldn't be a sole prop anymore. I know, but it's so easy. Yeah, but you're giving away $8,000 in self-employment tax. You could cut that in half. $4,000 is really a number. Yeah. I had a client change this spring, an attorney, convinced me she was never going to make a dime. First year she made enough to owe $2,000 in taxes. Mm-hmm. And I said, well, if you'd been an S corp, I could have saved you $1,000, but I just charged you $1,000 to do it. Since you wouldn't have made any money, I'd have just got Don Trump's money. Or this year, you're like 8 or 9. I could have saved you $4,500. $4,500. Whoa, that's a lot different now. Now we're talking $4,500, and so now my return goes from $200 or $300 to $700 or $800. Yeah, it's less. Or unless you don't do the accounting well, right? So anyway, so that gets how to get the accounting clean and work with them to get their books done and those kind of things.
And part of it is they there's like life events or business events where, like I had a client that he had a contracting business, mm-hmm. And he had a subcontractor going out. He got so many jobs. He went from like 40 grand on his schedule.
Yeah, right.
600 grand.
Right, same thing with right.
Netting 100 grand, and it's like, no,
yeah,
should have been
all the time. 50. So my buddy with this big swing, mm-hmm. we calculated, and I hope he doesn't mind, but it's about 13 or 14 G's that had we talked in November, come up with a couple of different plans, we probably would have maybe been able to keep, I don't know, maybe 10 or 11. So we immediately converted it, but I could have saved him a third of a car. Well, but not his nice Jeep that he bought, but a nice car. Yeah. You know what I'm saying? So, anyway, so even people that are hitting home runs, there's no real reason that we just give away money we don't have to. And I have doctors, that will take more in W-2 than I really need them to or want them to. They just feel that way. Mm-hmm. And I will tell them, okay, doc, taking that much W-2 versus this much W-2 was at 2.9% for that 20 grand. So it cost you, $600. He's going, thanks.
Good to know.
Good to know. They just want to know the answer. Yeah. The thing is, I've got clients who call and will say, how much do I owe in April? I think you owe 10 grand. Great. How much if I pay in April? $10,100 because you didn't make estimates. What if I pay it October 15th? $10,297, 200 whatever. So it's going to cost me $350 to wait till October. Okay, Larry, thanks. Click. In his tax return, waiting on a document, sits in our back office. He comes in on October 10th. He's ready to pay his money and eat his $300, but he spent his 10 grand growing his business. Yep. And he's going to spend $300, but to him, he didn't pay last April, mm-hmm. last June, last December or November or September, last December or January. He didn't even pay April. He paid in October. So some of this 10 grand was actually due, and I'm showing air quotes, back 18, 20 months ago, back in April of the previous year. Yeah. So if you owe, so I had a client that was building some stuff and they had like $100,000 they did with that. But they probably couldn't have borrowed $100,000 for 20 months for the $300 or $400, no, it's like $2,500 penalty or something they got hit with. Still, they probably couldn't have done 100 grand for 15 months for $2,500. You know what I'm saying? Yeah. So some people have to look at their business as a way to manage their business and growing. So I came out of a controllership position, and that's the jobs that I had. We had to grow businesses, so I had to be responsible for cash flow. And so I try to help our small businesses do that by looking at also what our tax rate is. When I was in business, we did the same thing for our big businesses, but we were paying a flat income tax.
Yeah.
So I knew where it was, and I knew what, I wanted to get below. Back in the day, it was 50 grand, and then you had different thresholds. So we knew we've always played this game, but I just brought this game more to the small business guy and the CPA, who today, he saves him as much money on the first year as he absolutely can. Whether or not it messes the guy up in the future or not, he doesn't care. He doesn't care.
I'm trying to impress you now.
Right. So look how much money I saved you. And then that depreciation turns around next year and it doesn't look so good. And then they realize, crap, I should have only taken half the depreciation or 25% of the depreciation the previous year instead of 100% of it. Let's only deduct $10,000 instead of 40, and then carry the other 30,000 into this year and the next year and the next year over a 5-year period. Much better tax rate over that 4 period than saving you $0 on a car.
Absolutely.
All right. Well,
should we? You're open to.
Questions?
You're open to coming back, though, right?
Yeah, absolutely.
It's not a far trip.
No. It's yes. I'll send you I will not send you the bill for the rental of this week. Well, I won't rent this room this week. Yes. No, but I think what we should do too is understand a few. I've done some other charts. I've done some other things. One of the things, Joe probably has to go outside. I've also been doing things, if we want to talk. There's things like HRA came out. So the HRA came out, and also I'm pretty good at looking the newspaper and telling people that this graph is wonderful, and then ask you, tell me what it means. Okay?
He did this to me off here.
Alrighty, and he already looks at this. Yeah, so I did that, and you did not have. You had more of a look of I don't know than you do today. But basically, what it means is if you turn it sideways, it means if I had a $100,000 house on the first date of this was 2011, January 1st, 2011 or 12. If I had a $100,000 house, it's worth $156,000 today based on these rates, and it's just based on those rates, based on my neighborhood. But if you had said, hey guys, by the way, if you have a $100,000 house, it's worth $156,000, or you have a $300,000 house that's now worth $468,000, that would have been beneficial to the newspaper people. And I do have to give Steve Brown, I guess it's his Twitter account. I love these things. But I turn them into...
People will tell him, hey, you need to clear up that post.
Yeah. And so, and it's not that, it's just that, what it is if you turned it sideways and just looked at it at a $100,000 house or $300,000 house, well, it makes sense. It went up 4% the first year. $300,000 at 4% is $12,000. Then it went up 6% the next year. 312 times 6% is, 18. And it just adds on. It's a simple formula. It's a simple graph we do in Excel. But that really gives people an idea.
To you though, but yeah, the normal Joe won't figure.
And it doesn't mean a lot. So I try to pull these out of the paper. I put these and give these to my clients. I have a one that I really like. We'll post at some point. Is so you make $90,000. How many deductions do you need to really save 83 cents on a dollar? You need 10 grand.
Yeah.
Why? Because the tax rate between 80 and 81, or 80,250 and 80,251, follow this. The dollar at 80,250 cost you 12 cents. I'm only going to take 12 cents out of that dollar. The next one, I'm going to take 22 cents out of it.
Based on the rate?
The rate went from 12% to 22%.
Gotcha.
So the next dollar went up from, I ended up with, instead of $1, I ended up with 88 cents.
Mm-hmm.
The next day, for the next dollar, I only ended up with 78 cents. Do you want 88 cents or 78 cents?
Depend. No.
Well, yeah. But in this particular case, so if you're making $90,000 and you have a deduction for mortgage interest or property taxes, and it adds up to $10,000, then you get your income below, that $10,000 really saved you 83% in taxes, because it took you from the 22% bracket to the 12% bracket. There's the other big bracket is from 32 to 24%. So here's the brackets real quickly. 10%, 12%, 22%, 24%, 32%, 35%, and 37%. So look, 10 to 12 is a 20% increase in taxes. 12 to 22 is an 83% increase in your taxes, and it hammers the small business guy and the guy making $40,000 or $50,000 a year. Their salary, they're getting hammered at that rate. The next group, over 80, goes all the way to basically about $300,000 when the next rate of 32 goes in. So it goes 22 to 24. But at 171, the 24 jumps to 32, which is another 33% increase. So what happens is you have the guy who's really mad that makes about $120,000, because he's eating on average the most amount of taxes of just about anybody. You figure in his property taxes, his taxes come out of his check and his FICA and all that match. He's at $120,000. The guy's paying $30,000 or $40,000 across all the taxes: sales tax, property taxes, business, personal property taxes, real estate taxes, all that. It's enormous that when you look at it, and the burden generally falls on the small business guy who's making $50,000 to $150,000 a year. So the guy that's making, so we try to find each bracket. So we try to ride out that $80,000 limit as long as possible. Then we try to ride out the $171,000 bracket. Does that make sense? Yes. So it goes back to my little chart that from the very beginning, that's a straight line. That I used 80,000 because that was one of the big jumps. But we always, right over that, it's an 83% increase in the dollar of the tax. Because instead of 12%, they're taking 22%. So 10/12ths, they went up 10%. They went from 12% up 10%, so they went 10/12ths up. So the rich guy who goes from 35 to 37% or 2/37ths, he barely even feels it. Yeah. He's making, $500,000 or more. He barely feels it. The guy who goes from 32 to 35%, 3/35ths, 10%, he's probably over the threshold for Social Security. He probably got a raise, and now his backside, he's probably not worried. It's the guy in the middle and the guy in the small business. That's the guy that is really being hammered on, and that's who we really try to figure out how to help. And what we do is we try to figure out how to make what's passive, what rent can be to your passive activity. Make $20,000 in rent, that's reasonable. That's all passive. You make $150,000 between your S corp. Take $70,000 out in a K1. Maybe take an SEP of $20,000 or $30,000 and take $60K in a K1 that doesn't have any. So there you got $80,000 not subject to self-employment tax. That's $9,000 or $10,000 in self-employment tax that I'm not paying, that people that have a second house or somebody that just has a job has to pay. And that's a big change on somebody making $150,000, $200,000. It's putting 8 or 10, 5, 6, 7% in their bottom line. Now, the guy a doctor making $600,000, he is what he is. We just don't want to pay penalties on him. Yeah. But the small business guy is the guy that unfortunately lives with the biggest burden of taxes in our world today.
That's why Larry's there to help with those guys. That's awesome. So you know exactly who you're helping, who your audience is pretty much. And you're getting them the most bang for the buck.
We try to figure out how to figure that
the most reasonable fashion.
Right, and sure, and we have doctors that will make a decision to the Tesla, somebody bought a Tesla and it brought their rate way down.
The energy credit?
Yeah, not only the credit, but they bought the Teslas for business, and it's like 80, the big one, and so they got a tax credit, but they also do business. Yeah, if it's business, if it's for the business and use in the business, you can. The credit's on the personal. The credit lands on your personal. It's got to meet criteria.
It's listed property.
Yeah, right, and you're using the business portion of it and that kind of stuff. So that's not uncommon. But what happens is it knocked them kind of in my chart down below where I kind of had them. So now they've got depreciation. I'm going, do you really want all this? And he goes, yeah, we wrote a check for all that. I said, I know, but I know you have less cash, but we could even just leave it. And they make the decision, and I don't care. I can't care about anybody that owes taxes or pays taxes. Only thing I care about is what their liability is and what can I do to make the liability lower. And because if the liability is 10 grand and you choose to wait till October and pay $12,250, that's your choice. I told you in October that I thought you owed about 10 grand. Mm-hmm. Or November I told you owed. The fact that you choose to pay $12,250 on October because you're building a new business is completely up to the small business guy. And for people to press on them about the 1040 ESs, I look at my clients and say, here's the penalty you paid last year. Here's what the penalty will be this year if you don't do it. And do you want to eat that penalty, or do you want to spend them? Do you want to send them, $1,500 every quarter or $20,000 every quarter? And then we have big clients that do send them $30,000 or $40,000. And what they do at the end of the year is they say, Larry, I've been sending them. You told me to send them 33, 33, 33, 33. I sent them 30, 30, 30. What's my last one need to be? Sometimes the answer is 22,000. Sometimes it's 38. And in January, they'll send in the last one. They're trying to do something, put a new wing on the house, do whatever, and they're kind of conserving cash. And they go, well, I like round numbers and those kind of things. And I go, okay, well, this is what that model does for you. It puts you a little bit behind on this, but ahead of this, and it's $50, whatever. It's when the penalty becomes $2,000 or $800 that I'm going, it's no longer just a dinner.
Yeah.
If it's an expensive dinner for the four of us for $250, and you want to eat $250 because you don't want to pay now, you want to wait till June, I don't care. Yeah, nobody does. I'm not losing any sleep over any of those decisions. It's completely up to the taxpayer. I give them the data and the information, tell them when it's due, and then give them the data and the information that says, if you choose to be later, I think it's about this much in a penalty. And I forget on this one guy, but when it finally came up, it was like $80 less. He said, well, you told me it was $25.96 and it was $25.13. I said, I was doing it on the back of an envelope, just kind of eyeballing it, because he doesn't need to pay me to find the exact number. He's not going to pay until October because he's got it in his mind. He's just trying to manage his cash. And it's hard for small businesses.
Yeah, they're worried about that small business.
Yeah.
They're trying to stay.
Yeah, and one of the things that we do is, remember, we set up about 75 or 80 entities. So again, every year. So send in the basic template. We can post the template out there. We take a basic template. We then go online and we create it, and we get it all done. And boom, we get the book. We will send the book out to them if they're in town. We bring them in, have a meeting, go over the book. We can do that one of these days. Maybe get the book out and take a couple of pictures. It's got the stock certificates and the stamp, and what's the difference between an ink book and an LLC book. I can show you all those because I have both, and I filed right. I have both, and I can show you. The main difference is the ink requires me on the second March of every year to have a meeting with myself.
And you gotta do those meetings.
I gotta do a meeting minutes. Me, myself, and I have to sit down on March 2nd of every year. The Tuesday after March 2nd. It's mine.
You choose the day.
I chose the date 10 years ago. Yeah. And the thing comes up, and it's, after, and it's typical, of standardized things for companies. But yes, I think mine's the first Tuesday after March 2nd or something like that. And that's still every year, if I need it for the banks, I got to pull my sheet up and, oh crap, I need to backdate that to 3/2. Oh shoot, I need to do this week. I got to do one this week. It's 3/5, yeah. So I think so. So I usually do it when I do the tax return. It's a $0, and I usually do that minute and just throw it in there. It's for legal purposes about being sued more than it is anything else.
Yes.
So.
Good stuff. Well, I don't know when everyone is going to see this, but Larry is going to have a YouTube channel. He's going to be posting videos about accounting to give y'all all the details, everything you need to know to kind of get a grasp of what taxes are, what accounting is, and everyone should know this ultimately.
Yeah, I mean, they should even know. I teach people about their own, about my own, and what should I know about my own? Well, you should know that you make about $135,000 a year taxable. And he goes, how would I know that? I said, well, what's your salary? $180. What's your wife's salary? She stays at home. What's your deduction for your mortgage, interest, property taxes? About 30 grand. Well, 180 minus 30 is about 150, so maybe I'm a little off, but I'm saying it's not rocket science to figure out. It's not hard to do, and it's not hard to do even on an estimated basis, and that's what we try to do with the small business guy, because they usually are the ones that get caught behind. How do I owe these taxes? Usually a penalty, because they go, I didn't even know I owed $10,000. Well, I tell mine up front, hey, this is about what I think you owe based on this math. Then at the end of the year, I go, do you think you make about $142,000? He goes, I think it's about $148,300 is what I was kind of scribbled over here. I said, great, how did you do that? And I said, oh, did you forget the $3,000 deduction for the prior year? Damn it, I knew that I was missing something. But they get good at it. Yeah. They get good at it, and they understand it. And then at that point, it makes a lot of sense. But yeah, I enjoy the blog. I know a lot of this is something that sometimes people have to see. They own a small business. We do a free consultation too, 30 minutes to say, hey, what's your business? What you doing? What are you set up as? How are you doing it? And then get them, oh yeah, that's what you should be. That's your S Corp, this is what we charge to do those things. Yeah. And we can, my wife is in charge of all that. I just do taxes, and that's the key.
Awesome. Thank you so much for being here, Larry. This was great. Everyone, we will put it in the notes for the show, all the details about Larry and where to find him. And like he said, you get a free consultation. So you Today's a great day to start your own podcast. Whether you're looking for a new marketing channel, having a message you want to share with the world, or just think it would be fun to have your own talk show, podcasting is an easy, inexpensive, and fun way to expand your reach online. Buzzsprout is hands down the easiest and best way to launch, promote, and track your podcast. Your show can be online and listed on all the major podcast platforms or directories like Apple Podcasts, Spotify, Google Podcasts, and plenty more within minutes of recording. So it's just a click of a button, it gets launched onto all these platforms. I use Buzzsprout. It has been the absolute easiest thing to deal with. So for those of y'all out there that think that I'm working really hard to put each and every podcast on all these platforms, each individually, you're wrong. It's super easy. They did all the work. Buzzsprout, they're awesome. Everything is so smooth. They help you so much with your podcast. So they're always coming out with their own podcasts on podcasting and how to improve them and how to reach more people and so much more. It has been extremely helpful for me. And so podcasting isn't hard when you have the right partners. And the team Buzzsprout is passionate about helping you succeed. Join over 100,000 podcasters already using Buzzsprout to get their message out to the world. Follow the link in the show notes to let Buzzsprout know that we sent you here at Oobs News. All's Well, dreamy mattresses for real life. All's Well believes in the power of a good night's sleep for all. It's been their guiding principle since launch. Democratizing good sleep is the reason for being, And they've proven this with products that feature innovative technology and unbelievable comfort and support without deflating your wallet. Designed to make good sleep accessible to all, the Allswell features hybrid mattress technology, combining the best of both worlds, memory foam and individually wrapped coils, for a winning blend of comfort and support. Their goal was to create an affordable mattress without sacrificing quality or luxury. The result? The Allswell Queen costs $345. No, that is not a typo. $345 for a queen mattress. So, follow the link in the show notes. Let's Allswell know who sent you and help support our show. For free shipping, 10-year limited warranty, 100-night risk-free trial, and financing on these mattress sets for as low as 0% APR. Guys, this is an offer you can't refuse. I believe in them. Y'all should believe in them. Go check them out. Allswell for dreamy mattresses for real life.